105.7 Light FM. That's Cheryl Crow. I'm Morning Dave. Hey, we're up to 68 degrees in Sebring already. I've been promising you today's going to be pretty, and I wouldn't lie to you.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And good morning. It is time to check in on your finances and see what Wall Street's doing to us this morning. On the telephone, Philip Statler from Statler Financial Services in downtown Sebring. Hoo-ha! I had some green ink yesterday, Philip. How was it?
We did, at least in most of the indexes. The NASDAQ kind of was lagging behind, but I think the other ones kind of made up for it. Well, the S&P 500, I guess you could say, I mean, being up 53 cents doesn't really, that's not really up, is it?
Yeah, we'll call that boring. Yeah, they say that NVIDIA dropped about 2% in the NASDAQ index being price-weighted. You kind of expect that to go down. That was mostly NVIDIA. I did notice that the Russell 2000, we haven't talked about its rise back upward again. It was up 1.1%. By comparison, Dow was up 0.55%. The S&P, like you said, was 0.01%, basically flat. But the Russell was up 1.1+% and closed at a new closing record. So now we're virtually unanimous. All the indexes are pretty much in nosebleed territory right now, aren't they?
They are, Dave. And so the market's trying to find any reason to continue that upward movement. And, they may have found it today, right?
It sounds like it, because we ended up getting, I guess you can call it, what was it? Let me see here. Snow White? No. Goldilocks. That's it. We had a Goldilocks moment on the first, and we really need to say, this is the first on-time federal government release we've had in 3 months. Jobs added in the economy last month, 50,000. Anemic, crummy, needs a whole pile more. And it was a little less than they expected, because they expected, I have 55. Did you have a different number on the expectation?
Expectation was 73,000 for market
rate.
Woo! Yeah.
Okay. One of my tip sheets said 55. So we underachieved, but we added some jobs. And with all of that underachievement, the unemployment rate went down from 4.6 to 4.4%. And I look at that with an anemic job ad number and then 0.2 of a point down on the unemployment rate. I'm sorry, my pocket calculator blew up when I tried figuring out how that could happen.
Yeah, and my numbers we were at 4.5 and we dropped to 4.4. You said 4.6, and so that's not. I just wanted to beat that.
I thought it was 4.
It was 4.5 in November.
Okay, we've been using old data, and we've been going so far delayed in the process. That was probably the October number we had at 4.6. Yeah, I'm still quoting that. It's nice to have crud come out of Washington on time for a change, isn't it?
It is, Dave. We had that. Hourly wage went up a little bit, 0.1% from 0.2 to 0.3. Hourly wages year over year went up from 3.5 to 3.8. And then the other thing that came out was housing starts. Mm-hmm. Housing starts down from what was expected. The expectation now is like 1.3 million. It was 1.25 was the actual number. Now these are old numbers. This is October. November, December numbers haven't come out yet. So we continue to watch those, but yeah.
We couldn't have the government get back on track all at once, could we?
No, of course not, Dave. It takes time.
We're talking civil service here, my friend. That whole thing, that like I said, that Goldilocks number, anemic, missing slightly, but still showing at least a little bit of growth, meaning we're not in disgustingly bad shape. That's got to start giving the investors an opportunity to start thinking, well, maybe Paulson will change his mind and he'll have a softer Fed board at the end of the month, and maybe all those threats about only one interest rate decrease all dang year might not happen. So I gather a little bit of optimism came out of that, didn't it?
It did, Dave. I mean, I was really kind of surprised to see the numbers and then see the indexes, the futures start to increase, really doubling from what they were before that announcement came out. So, that was, I guess, like we say a lot of times, bad news is good news when it comes to the optimism of maybe now we'll see an interest rate cut. But Trump's not counting on that, right? He's
nope. So he's got his own new scam out, doesn't he?
He does. He does. He's decided that he's going to create his own quantitative easing by asking the Federal Home Mortgage Association to buy $200 billion worth of mortgages, which will basically help reduce the interest rates. And so he's doing whatever he can heading into the midterm elections to get real estate moving again by getting interest rates down. And if the Fed's not going to help him, he's going to figure out another way to make it happen.
And one needs to go back into history for this down the line, because when the Federal Reserve was fighting our downticks, what they did was they flooded the market by buying mortgages like they were chiclets for a little while. And there was an estimate that like 70% of the mortgages in the country were actually owned by the federal government. What that did is that forced interest rates down and gave us a lot more liquidity in the market. Now with Paulson saying he wants to go slow, and the Federal Reserve has been unwinding their balance sheet and not buying the mortgages as much as they had, that's made it a little bit harder for Trump to jumpstart the economy. So if the Fed won't do it, well, what the heck, we'll do it with another source. I just find that I don't know whether it's a good or a bad idea, but I find it absolutely fascinating. If you can't get the Fed to do it, get somebody else to, right?
Well, yeah, I mean, let's face it, real estate, it is tough right now for folks to buy a home, especially, that starter home for young families or those actually even in the middle income range. It is, with interest rates where they are and home prices where they are, that's a tough combination right now. And so I can see I can see what he's trying to do. The question is, how's that going to light our economy? Is it going to continue to push up inflation? And that's what we don't.
That's exactly why I'm so reticent about it. Yes, we need to push mortgage rates down somehow, but at the same time, flooding the marketplace with more liquid money, it's a horse apiece, which is why I'm kind of reticent about wondering whether or not this is the right thing to do at this moment in time.
Yeah, I think one thing could be if we lower residential principal resident mortgage rates, that might be a good thing, and keep investment property rates the same as they are now, and like HELOCs and stuff like that, where people could go in and get their equity. If we keep those interest rates higher, that may help offset some of that. Just use it specifically for personal residences, may help temper that down a little bit.
It would help on that front. That's something that a whole lot of potential home buyers desperately need. So it's hard to argue against that one. Other uncertainties on the horizon around here at the moment, they're kind of watching the Supreme Court. It could happen as early as today, that lawsuit about President Trump's tariff policies. Keep in mind, tariffs are supposedly something that need to be approved by Congress. And on his first day of office, the president declared an economic emergency, giving him the powers to be able to adjust tariffs accordingly. And he's obviously been doing that quite a bit. A bunch of the states and other parties sued, and it went to the Supreme Court. And sometime over the next short time, could be as early as today, we're going to end up getting the Supreme Court decision as to whether or not all of the tariff jockeying up, down, and sideways that the president's been doing to leverage other concessions, whether or not that's constitutional. And that's been kind of a nightmare to a lot of folks, because some of the naysayers and worst-case scenario folks are saying maybe some of those tariffs going all the way back to April may even need to get refunded. Now, that would be a nightmare.
That would definitely be a nightmare if that happened. That would be, Yeah, I don't even know how they'd go about doing it, but it would definitely be problematic and a problem trying to get all that figured out.
Absolutely. And that's one of the things that I know a lot of stock watchers are watching, wondering whether or not the import-export sensitive countries or companies may very well have a little bit of worry on their horizon on that. We are not into earnings season yet. It's only the 9th of the month, but we even got a household name telling us how they did last quarter, don't we?
We did. We have WD-40. They reported their first quarter earnings and they reaffirmed their full year guidance. So that was some good news for them, and they came in really within the consensus estimates from that standpoint. Outlook for revenue was good as well. And I guess because they're just maintaining, it's not good enough, Dave. Just not good enough. They're down like 8% this morning.
Picky, picky, picky. You do what you say you're going to do, and it's not good enough, huh?
I guess that's just the deal. A little tidbit here, though. Intel was getting a pop. Let's see if they still are. Yep, about 2.5% after President Trump posted some flattering messages about them on social media. So that it's all it takes is the president to talk about you in a positive manner, and stock price goes up, Dave.
Oh, Lordy. I wonder if I can get him to say something nice about us. Maybe.
Work on that.
Resetting the table. That's it. Resetting the table. If you weren't tech, you had a pretty good day yesterday. We were on balance green between the Russell, the Dow, and a little bit of green on the Standard & Poor's. 45 minutes before we open this morning, what are we looking at?
Dave, we've got green ink across the board this morning. The Dow's up about 0.3%, as well as the S&P 500. NASDAQ 100 is up about 0.4%, with the Russell 2000 winning today, up right now 0.5%. So good news there. On the other side, silver's making a comeback today, Dave. I think it was down 4% yesterday morning. It's up 3.8% this morning, $78.06 an ounce right now. The gold's up 0.7. Crude oil up 0.9 to $58.29 a barrel.
I think that uptick came from something I was reading about. Somebody said my bull crud detector is going off over whether or not we can actually control the flow of Venezuelan oil, and everybody's kind of saying, whoa, wait a minute on that. We'll see how that shakes out and see if it'll stabilize somewhere where we want it. The overseas markets, the Asian Rim, generally happy overnight. The 6 a.m. close had the mainland Chinese indexes up just a little either side of the 1% mark, so it was on balance a good day in Asia. European markets are also relatively happy halfway through their trading day. The average European index up, doing a little math in the head across the two indexes, up about 0.9% halfway through the day. So everything's coming up roses so far this morning. If your retirement plan isn't necessarily coming up roses, we got to talk to you, Philip. How do you find you to get a retirement on track?
David, give us a call, 863-382-0037 to schedule a core retirement analysis. Folks, that's you and I on the phone, making sure that you're on the right track to the retirement you always dreamed of. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM, and streaming live on, what is it, Dave? 730.com?
Newstalk730am.com.
There we go.
And I appreciate it. Thank you, my friend. I'll see you next week. We'll be here to keep everybody in the loop all week long. You have a good weekend.
All right, buddy. Talk to you later.
Take care. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Imagine.
Folks, I want to thank you for joining us today. Have a great weekend. I look forward to speaking to you again next week. Bye now.